When you talk about a big position, we own 1.5 million shares.
Right.
And it took us, over 3 years, 3.5 years to acquire the shares. So it's a $300 million investment. And that represents less than 1.5% of our assets. So basically, it's $300 million is a lot of money. On the other hand, it's 1.5% of our assets. But the assets that we can invest in, we have most of the investments are we have emerging markets, we have small cap, we have mid, so it doesn't fit in those pockets. But where it does fit, I have extraordinarily large positions where I can. And the reason I do is because this is, in my mind, one of the most interesting companies, maybe the most interesting that I've ever invested in. And so for my career, it's risky, but for my career, I've made 10 times, 20 times, 50 times, 30 times. In a lot of companies. I think in this investment from here, in the next 15 years, we can make 30 to 50 times our money.
You said it was risky, though.
30 to 50.
You said it was risky, though. Does that mean you think of it a little bit like a lottery ticket?
No. Nothing at all like that. But you're risky because you're dependent upon a number of factors that you can't control. And so you're dependent upon, to some extent, legislatures, you're depending on some extent. So you are, with Tesla, nobody wants you to succeed except for the people who buy their product. And so the government doesn't, the car dealers don't want you to succeed because the cars don't need service. The unions don't want you to succeed because Tesla is remaking the way you make cars. So initially they have to prove the concept, then they got to prove they can make them, then they got to prove that they can make them profitably. Which
do you not worry about their cash burn? And let me ask you, related to the cash burn idea, so many people have looked at this transaction between Tesla and SolarCity, and the critique is that effectively he's using one business to support another, which is even more trouble.
So when I started to think about Tesla 4 or 5 years ago, stock was 33. We started to invest, and it's now 180, 190. Our average cost is over 200 now because I bought a lot of stock here. And when we started to invest, and I was telling people how excited I was about the company and how big they could become, people said, how can you think about that? If they get as many cars as you think they're going to get, there's 200 million cars in this country. I think they're all going to be electric someday. And there's 17 million cars a year produced in this country. I think they'll all be electric someday. But if I'm right, then what happens is that there's a tremendous demand for electricity. Where do you get it from? The electricity grid is not growing. They're not building new power plants. A new power plant costs $500 million, and they get a $50 million return on it. And you can't pass the environmental permits, so they're not getting it. So now what's going to happen, and why this is such an interesting, this is not something that, okay, they're going to pay $5 billion for it, you can sell off the receivables for $2.5 billion, you pay $2 billion or $2.5 billion for it, it can make $400 or $500 million a year, steady state. That's not the reason you're buying it. That's financially, it's an interesting transaction, but that is not the reason you're buying it. The reason you're buying it is you are reinventing the electric grid. That's a bigger opportunity than cars. And you need to do it because you're not going to have enough electricity for cars. Do you know that in electric plants right now, if you think about the power that's used, do you know how electricity works? Do you ever take physics?
Years and years and years ago.
Okay, so there's a wire. And when you turn it on in the morning, you have peak power.
Right.
Peak power is because you're filling up that wire, that pipeline, with electrons. And then when you use the electrons, as you use it through the day, then you're picking up 1 or 2 electrons at a time. So initially, a surge in power, a surge in demand, then it goes down. The electric power plant, the grid, is not being used as its full capacity. You have to have more than you need by about twice. So if you can level load in some way, then you can have twice as much power produced from your existing plants as you do presently. Twice as much. So the reason this is such an interesting transaction for Tesla is they are going to be massive producers of batteries at very, very low cost. When I started, it was $22,000 a battery for a car. It's now in the low teens. It's going to be $5,000 within, I guess, 5 years. An engine cost is $10,000 going up. The battery cost is $5,000 in 5 years going down. But what you're going to do, you're going to have big batteries in people's homes and solar power. So solar power is like a Trojan horse. So solar power are these roofs, amazing roofs. Everybody
we've talked about them on the air. They look like
they look amazing,
and they're no longer just those, ugly glass reflective things.
So that's going to start in a year from now.
Right.
But in the meantime, what's going to happen is that they will, because you're going to have solar, you don't get solar at nighttime, so the batteries save up the power, and then the battery can, now you do it at night. But then the reason is that this is really interesting, is that the batteries, what they are, they're going to be a network, and they're going to allow the utilities to hook into the Tesla power network, and then instead of building those plants, they'll keep it level load. At the beginning of the year, one of the executives, Tesla, asked me what I thought. The stock was at 200.
Below 200.
Yeah, and he asked me what I thought the stock would do this year, and I said I thought that with the introduction of Model 3, I thought the stock sometime this year would be 350 or 400, and I think it's going to be 500 or 600 next year, and I think it's going to be 1,000 in 2020. When they're at that time, I think they'll be doing 70 billion in revenues and making 10 billion in profits, operating profits, before they spend it to grow more. And that's with 1 million cars a year and the beginning of a contribution from, from solar roofs, from batteries, nothing from mobility yet. But that's just 1 million cars. There's 91 million cars in the world that are sold a year. I think they're going to have a significant portion of those at some point. So I think that this is just, when you asked me before to come on and take a victory lap because it's gone from 200 to 300, that's not a victory lap. This is just starting, in my opinion. And that was before, by the way, before Tencent had made an investment in this company. Tencent, do you know who they are?
Yep, it's a Chinese company.
Yeah, Chinese company. It's the largest publicly owned Chinese company, the fastest growing, 300 billion market cap, 320 billion market cap. So they bought 5% of Tesla that was announced a month ago, and they paid $1.8 billion. So they paid an average price of $217. This is 10 cents. And so I think that, and it's a passive investment right now, but they're studying it. And I think that the reason, so we have an investment in Tencent in our emerging market fund, and our guy met with him recently, and he was telling me that he thought that they made their investment in Tesla because they wanted to get investment before Baidu and before Alibaba. They wanted to beat those guys to investing in Tesla. Jamie Stone in my office had a Porsche. He bought a Model 3. He said, it's not comparable to a Porsche. He says it's unbelievably different. Our trader, David Schneider, just bought a Model 3. He says it's the best car he's ever had. My kids have, one of my sons has a Model X. He says he will never own another car other than a Tesla. Never. And if you talk to anyone who owns these Model 3s, they'll tell you the same thing. It's unbelievable. The quality, and it keeps getting better and better and better.
And they're buying, I assume, the
and so
$60,000 and $75,000 version.
So you're right. With General Motors, when they're making cars in their plants, they get 97% without defects. When Tesla has them, when you see those cars sitting around, that's because they're making them real fast and they're early on the ramp up. And when they're making them like that, what happens is that you don't have you have to make sure everything runs right. And so they're not making 97% yet, but the percentage they're making is higher and higher and higher. I was out with a couple of guys, I guess 3 people in my office, and we were out at the General Motors plant in Orion, Ohio last Wednesday. And we were with the president of General Motors. He was 4.5 hours, and this whole team. And we're walking around the plant, and we're talking. This is where they're making the Bolt, and this is also where they're making the robo-taxis. And he was telling me, just to cut to the chase here, he said, what Tesla has accomplished is extraordinary. Extraordinary. My first question to, and Mary Barra says the same thing. My first question to him was that, you got all these billions of dollars invested in plants that make motors. You're not going to need motors anymore. How is it that you're able to convince the board of General Motors to make these huge investments that are required in batteries and electric cars? Yeah, and the dealers don't want to sell them because there's nothing to fix. The dealers make all their money on fixing stuff as opposed to selling stuff. How do you get your board to do that? He says, well, Ron, there's a canary in the coal mine, is the way he said it. Canaries in the coal mine. What's a canaries in the coal mine? He said, well, we noticed that the General Motors consumers are using Uber and Lyft. We see these changes. He says in the next 10 years, the automobile industry is not going to be recognizable. Dan, who I think is an incredibly talented guy.
Dan Ammon?
Yes. He says that what is going to happen is that, I lost my train of thought on that one, but
that what he thinks is going to happen in terms of changing the car industry.
Yeah.
I assume.
Well, electrification. So he thinks that when you get the cost of a battery to be less than the cost of a motor, then it's going to take off. And the battery cost, when I started investing in Tesla, the cost of a battery per car was $35,000 a car, $35,000. It's now maybe $12,000 or $13,000. The cost of a motor is $5,000 or $6,000 or $7,000. The cost of a battery is going to be half of what it is now in 3 or 4 years. The cost of a battery keeps falling, the cost of an engine keeps going up. Then in addition to that, he says that you have to have 10-minute charging. Right now, it's 20-minute charging for Tesla. I said, well, how insurmountable is that? And he says, well, he thinks it's technically doable and you can do it faster, but he is betting on the fact that he thinks autonomous driving is where he can establish competitive advantage. And as opposed to electric vehicles, he says that automobile companies can control how fast that comes on. But I disagree with that, because there are all these countries that are saying, like China,
right.
City by city, they're rolling out and saying no more internal combustion engines. Norway, no more after 2020. And city by city, they're saying you can't sell internal combustion engines anymore. It's amazing. Well, it was a good quarter. They had $6.8 billion in sales versus $4 billion, so it's up 70%. And they made $1.4 billion cash flow in the quarter before they spent on investing. So that means they're at an annualized rate of $5.5 billion of cash flow before they spend on investing. Company's now valued for $60 billion, so it's 11 or 12 times. That's not bad. And then in addition to that, they are growing at 50% a year. And I think that this year they did sales at $20 billion. We started in 2014. They were doing $3.7 billion, and this year is 20, and next year is 30. And I think that in 12 years, we think in 12 or 13 years, 2030, this could be a $1 trillion company. Could be. I think it's clear they're going to be a triple. It'll be $60 billion in 3 or 4 years, but they could be, this could be a real big company.
Do you have any anxiety that they will have cash flow problems? They obviously have a debt payment that's going to come this month. There's a much bigger debt payment that comes in February, but potentially could be swapped for stock, depending on the price of the stock. It's getting actually close to where it needs to be for that swap.
As far as the cash flow goes, when I look at the numbers, it doesn't appear to be a problem. Elon Musk says it's not a problem. I take him at his word. And he could have sold equity a year and a half ago at $370, $380 a share. People were scrambling to buy. He chose not to. He thinks he's at the point where, you have these businesses that they invest. And when they're investing, they penalize profitability. And when they're penalizing profit, when you build a paint factory and you spend $300 million on the factory, and it's built for 250,000 cars a year, and you're doing 20,000 cars a year, 30,000, you're not going to be profitable with that. But all of a sudden you get it to 250,000 cars a year, you're making $150 million on a $300 million investment. Then you can double it. So you're at the point now where incremental investments are going to be incredibly profitable. They are now doing 5,000 cars a week. They're going to be able to do, of the Model 3, for virtually no additional investment. They're going to get to 7,000 cars a week.
The skeptics will say that there's something funny going on, that the numbers were too good, that maybe they pulled something forward into the quarter. Was there some kind of fleet deal or something done that we don't know about?
They told Wall Street this quarter that just ended that they were hoping to produce a gross profit margin of 15% on that car, on the Model 3, and it came out over 20. And internally, they were hoping for 20, and he kept calling me, you got to cut costs here, you got to watch that. I mean, when you're building something from the ground up, it's not easy. It's not easy doing what he's done. Remarkable what he's done.
Let's talk about the news of yesterday at Tesla.
By the way, one more thing. And when he started making the Model S and Model X, those cars initially, when they were selling for over $100,000 a car, they had gross profits of 20%. Now they're in the 90s for the car, and the gross profits are 31%. So gross profits keep going up, even though the price has gone down. The same thing is going to happen with this car. I think the gross profits on the Model 3 are going to be as good as they are on the Model S and X, and I think the Model Y is going to be the best one they've ever had.
Okay, so the other thing that happened just yesterday was the announcement of the chairman of the company. This coming, of course, after he reached that settlement over his tweet for funding secured, which we should still talk about because I don't think I'd seen you since that all did get settled. Robin Denholm is going to be the new chairman. She was the CFO at Telstra. Do you have confidence in her?
I don't know her. I've met with several directors in the past. I haven't met with her. I was told yesterday that I could talk with her next week, and I will. But I'm a fan of women as far as executives. Mary Barr has done an amazing job. Women from Boeing has done an amazing job. The woman who works for us has done an amazing job, who runs our business. So I'm a fan of women. I think they think differently than men. That's clear. And he's done phenomenally well with Gwen Shotwell for SpaceX. And maybe she's the new space. You keep your fingers crossed. I don't know, but hopefully she's
because
you
think
like
that
Gwen.
she's going to come in and actually run the company eventually.
Well, I don't know.
Shotwell at SpaceX effectively is now she's the CEO and she runs it on a daily basis.
She runs it, and Elon has input, and she says that he comes down and talk about things, and he holds the meetings for the day, and brilliant.
But this is structured the opposite way.
Well, Elon is 49. Is it 49 or 47? I think it's 49, but maybe 47. And so he's right in the prime, and so he's right in the sweet spot. And I don't see him retiring, but maybe he wants to be just the engineering guy, or maybe the new product guy, or maybe the dreamer for the business guy. I don't know. You never know.
What do you think, though, of the critique that this was a misstep?
But he says he wants to keep. He says he will be the last guy out of this company.
Well,
this is a big holding for you. I think it represents about 1.67% of your assets under management, which, by the way, are $28.25 billion, up from when you started with just $10 million back in 1982. But let's focus on Tesla for just a moment, because you've been a long-term bull on this stock, a long-term believer. You just met with the chair, but there have been so many questions that have been circulating. I'm going to let you make your case, and then maybe I'll push back on some of this stuff.
Well, for $28 billion of assets and $26 billion, $26.25 billion.
We're talking about overall assets, not your assets.
And profits.
And profits.
So we made our clients more than $26 billion in profits, and we now have $28 billion. And in 1992, we had $150 million.
Right.
So we made a lot of money, and made it by being a long-term investor, and often investing in businesses, as I mentioned before, which after we buy them for some period of time, nothing happens to the stock. In fact, one of the stocks that's in the news that we own right now is Iridium. And Iridium was in the news this morning and yesterday because they have Ariane. And Ariane is the satellite service that provided the FAA with information that allowed them to figure out what seems to be wrong with a plane, and they stopped it. But we invested in the final round of capital raise for Iridium 4 years ago. And after we invested, that was the last money they needed. We bought 10% of the company. Stock was trading at 7.25. I'll get to Tesla in a moment, but it's the idea that we have here. It's trading at 7.25. One of my friends is on the board. He told me that he had a significant personal investment in the company. Told me he thought that I would be interested in looking at it. Knew something about satellites. Said, who do we talk to? He put us in touch with the chairman. Spoke to him on a Thursday afternoon. Came up to visit us all day Friday. Spoke to him over the weekend. Spoke to him more on Monday morning. We did the rest of our diligence. And then we said, okay, we'll buy 10% of your company at 6.75, but if you sell to anyone else at a lower price in the next year, I want the lower price. We ultimately got 6.25 for it. And I said that by us investing in this company, then what's going to happen is that it's going to make this preferred issue a very strong issue. I want 10% of that too. He said, that's fine. It was a very strong issue. We got the preferred, 10% of preferred, then we got the common, bought 10% of the company. For 3 years, after we bought it, while they were making and launching satellites, stock was unchanged. So how many people can make investments where nothing happens in a stock for 3 years after they bought it? And SpaceX, by the way, was launching the satellites. We're an investor in SpaceX too, so I knew something about that. Now, in the past year, now that all the satellites are flying around, and the whole constellation, Department of Defense, IoT, Ariane, and so now all of a sudden they're going to generate revenues. The company's valued for $3 billion today. It's up 4 times from where we bought it. Didn't change for 3 years. Now it's up 4 times, and now it's $3 billion value. They're going to generate over $2 billion of cash flow over the next 4 or 5 years. And I think it's going to be twice the price.
And we're looking at the chart right there now too. But Tesla has to also be trying a patient investor's kind of patience at this point.
So Tesla, we began to invest in 2014.
But your cost is what, $219 for shares of Tesla?
Yes.
So we're trading at $290 now.
Yeah. So my clients cost, I haven't bought stock for myself for 17 years. This is the first stock that I told the board I would like to make an investment on behalf of our firm, Baron Capital, in this company, bought 225,000 shares at 235 after we bought, we have 165,000, including the 225,000 that I own for Baron Capital. And I did it for Baron Capital because I said, gee, I can afford to lose the investment that I have in Baron, in this company, but I can't afford not to make $1 billion. And which is what I think is going to happen over the next 10 or 12 years. So
1.6 million shares that you have includes the 225 for Baron, that your personal investment.
$1.4 million for clients and 225 for Baron Capital. Okay. But my investments are principally in the mutual funds, and they have been for 17 years. And I'm a big investor in the mutual funds every single year, significant amounts of money.
The concerns about Tesla right now. Let's run through a few things. Let's start first of all with the SECs.
But wait, let me stop one more thing before we start. So Tesla, when we started to invest, did $3.7 billion a year of revenues. This past year, they did $21 billion. The year coming up, they do $30 billion. I think in 5 years, they'll do $150 billion. So this is not a small company anymore. $30 billion in revenues from $3.7 billion. So the company is up 7 times in revenues in the last 5 years. And the stock is up 30, 40, 50%.
Okay, let's actually, instead of starting with the SEC, let's start backwards from that, just because you bring up the idea of how they're going to grow from here. The bear case out there takes a look at the balance sheet, for starters, let's just say, because of the run rate that they're going to be anticipating, because the company has said it's not going to be profitable in the first quarter. There has been an analysis I've seen that says they're going to, after they paid off the debt that they had, that was almost $1 billion, they see a run rate of about $1 billion in that first quarter. Will that get them down to a balance sheet that has about $2 billion on it? And is that enough, or will they need to go back for more capital?
Well, I think people are guessing. They don't know what the cost of goods is for the company. They don't understand what the cash flow is that's being produced from the cars that are being made. When they're making them all domestically, the cash flow is better than it is internationally, because they have to pay in 60 days, and they make the cars from the time they get the order in something like 14 or 15 or 18 days. So basically, they can make cars a lot faster than they have to pay. So
the cash burn, those analyses are not correct. That's not what you think.
No, there's $1 billion of extra cash flow that they produce every time they make $1 billion of annual sales. So.
Yeah, we had an analyst on the show yesterday who was talking about the cost of the battery, Joe. I don't know if you, the conversation.
We talked about it.
Yeah, I watched that. I was working out in the morning. I watched your.
You heard when
and you said you were going to clip it, and you were going to show it again.
Yeah, I don't know if we did that, but you saw it anyway, so we don't have to.
He basically made the argument that there isn't a competitive moat around the cost of the battery, which is to say that the cost of the Porsche battery and the cost of the Tesla battery, he was arguing, are effectively the same. He was saying that the cost of the Porsche battery was $230 to $250. 230 to 250, and the Tesla, at least the whisper number, was closer to 150, and he said that he didn't believe that number.
Yeah. So Elon Musk has said, given guidance, that his cost for a kilowatt hour is 100, or approaching 100, and I guess 10 years ago it was 300. So $300 then, it's now approaching 100, and it's going to be significantly less than that within the next 2 or 3 years. And you have to remember that Tesla makes half the batteries in the whole world. And when you think about competitive advantage, they're a business that's growing 50% a year, making half the batteries in the world, and shrinking the size of the battery, shrinking the weight of the battery, shrinking the components in the battery, shrinking the expensive things that are in the battery. Cobalt was 20 or 30% of a battery. It's now 2 or 3%. That's what's really expensive. So they have driven down the cost. They're making the battery more efficient. I brought a little chart, which I guess you're not going to be able to see. I could pass it around.
Yeah, pass it out. Maybe I'll be able to hold it up for Kyle.
So what you can see is that not only is their cost lower than everyone else's, but also the amount of miles they drive in a car is more for them than it is for anyone else. It's 4.1 miles per kilowatt hour for them, and it's 2.5 kilowatt hours for everyone else for a mile. So basically, they're getting more miles per kilowatt hour than anyone else, even though their cost is also lower, and even though the weight is lower, and even though and it keeps getting lower and lower and lower.